Hey guys, Sam here with you on Thursday, September 13th. We're kind of middle of the day, and as it's a Thursday, we're looking at traditional assets, so we poll our members and let them choose what gets reviewed here. And I had a couple of members asking about gold, so it worked out rather well here that was our choice here. So looking at gold here, now whether we're looking at a foreign exchange pair or gold here, where we're looking at the CFD, gold essentially trades much like a currency. So I always encourage the longer term view to get a sense of where we are, if there's a clear count and where we are in that count. So this is the 3-day, which I often mention I prefer to the weekly. Now if we look here, hang on one sec. If we look, so this could probably be counted a couple of different ways. So I checked this is longer than our one. So I think this is because of this is our little tell here, but I don't know that it matters for us over here. But we get a clean impulsive structure up here. And then we come down. Now, you can see here, that's why I like the longer term. You can see the wave count so clearly here. So it looks to me like we get an A, B, C into a B. This is fairly technical. We're looking for a B anywhere from the 50 to the 786. We get double wicks through the 6-5, but down we come, and we just blow right through first target, ultimately get third target, and even through that. So looking at where we are, well, of course, first thing we want to do is I'm going to take the absolute low here and go up to our absolute high. What do we see? Right, so any surprise there? Right to the golden zone here. And interestingly, so as I have this labeled as a wave 1, no overlap there. So we come in just far enough into the golden zone, we get the reaction. Don't overlap the 1. So, my guess is that's more structural rather than this being a 1, 2, 3, 4. Because now, so think about that. So if we relabeled and we did put 5 up here and said 3 was up here and 4 was down here, well, we don't have a very good start to that, do we? Right? So you could make that case that this was 3, 4, but we'd be looking for something, or at least a motive wave off of this low. So if we were on this degree, we'd be looking for a 1 wave of our 5th wave, and it looks to me like this is very corrective. So the fact we're kind of really just we're in a big box here. So if you just look at we're just even here we're just kind of range bound here. We're not, and you can it's reflected here. So you can look at here's one standard deviation. We can see where all the market acceptance is. Here's where all the volume is, right? So we're just kind of stuck in this range. Not that that's not a significant range, but if we step back and look longer term, this looks much more to me like this is completed and we're still in some sort of a correction. We would need a 1, 2, 3, 4. Is it still possible? Yeah, it's still possible, but I don't want to try and tie the two together. This looks complete, all the way up to our high here. Now we've corrected that and come into golden zone. So it's a little bit. So then you got to ask, well, if this is corrective, where does that leave us in the count? If this is an ABC that's completed down here right into golden zone, well, what are we doing now? Well, potentially we have some sort of a combination. It's hard to say. So we can look A, B, and then we go A, B, and then we get this very clear 5, and then I get a very clear and clean ending diagonal in my 5th to give me this low. And it looked fairly good coming off of that look. It looked like 1, 2, but yeah, is there still a chance that we could have 1, 2, 1, 2? Yeah, it's still alive, but it certainly doesn't look very good. This looks much more corrective, and additionally, since I can go A, B, and you can see the A, B, C into my B here, and then I get another diagonal to take me up to my proposed. I can't remember, see if it's here. So into my proposed, I think it's over here, into my C wave. So I get this diagonal structure. Well, let's go down. Oh, let's go to the 12-hour. See how we look there. So here, I think this. Oh yeah, I'd move this over. So here's why I had the C over here, because it looks like I've got a 1, 2, 3, 4, 5. Looks like I've got an ending diagonal in that. So this looks like there's some sort of one, where the 2 is. I don't know that it matters. 3, 4, 1, 2, 3, 4, 5 gets us up here for this double top into my 5th of what I'm proposing is the C wave. Well, now here I'm on a 12-hour chart here. So looking at this, well, if we've got this correctly identified here, so we get a 1 ABC into a 2 up for the 3, down for the 4. So we're in a diagonal, right? Clearly we're in a diagonal. Well, we got to check a few things. So first thing we look and say, well, is this technical? All right, here's 50 to and through target. Then I'd pull here and see how do we look going from the, since we're in a diagonal, pull this off here so we don't get confused by that. So if I go swing low, swing high in a diagonal, we're looking for that, we're looking for a 50 for the 4. We come right perfect, right? And then up we go and we get this. Now we don't get to target, right? So that's an unfulfilled target. But I still think this plays better since I get this technical pivot here as a 1, 2, 3, 4, 5, which is, as I'm counting it, has us completing a C wave, right? So it stays corrective. And then this reaction here, so clearly this is a stiff resistance up here at this 1350, 1360 range. Can't get through it. And then boom, down we come. So I have this as completing. Now, if that's completing, if we've gone B to C, well, if we were hoping for any sort of a retrace off of that, we've already broken the 786. So that's why, again, this looks like this is ultimately going to be counted as a corrective. So after we come down for this A wave here, it looks to me like we go A, B, C, and we're topping up here. And now perhaps now starting a new trend coming down. A little soon to be making that call. Let's go 4 hours, see how we look coming down off of this C. Well, it's hard to miss this first 5 wave structure, right? So coming off of this pivot up here, right, with that ending diagonal, it's again hard to miss this 1, 2 into a little ABC into my 2, down for my 3. Let's open that up so we can see it better. So we can measure, right? Always we'll look to measure to try and confirm what we've identified and how these are laying out. So here's our high probability zone for a third, right? Between the 1618 and the 175, we tap right into it, right? Little ABC for my 4, right? So that very, very technical. 1, 2, 3, right into the pocket. ABC into a 4. We look for that relationship between the 2 high to the 3 low. We come right Vegas wave. We're in, we get shy of the 50, past the 38. Just a little bit of a push there. Then, of course, no surprise. Then we go right to target. So that gets handled. So that algo gets paid. Then we get our little reaction. So it looks to me like with our Elliott hats on, I complete a 1, 2, 3, 4. We don't threaten the 1. So I've got a clear impulsive move down after this corrective structure here and all of this topping action. Well, so then you sort of play it out. Now, of course, we have the benefit of hindsight. We're just trying to identify where we are in this trend. Well, if that's 1, same thing, right? So if that's 1, and this is an ABC into a 2, so granted, we have to allow for a very shallow second wave, right? We don't even make the 38, right? So unusually shallow for a wave 2 retracement, yet we do see them, right? It doesn't invalidate the count. It's just low percentage to be looking for the 2 there. Much more likely to come up to the 50, but weak market. We can't get there. But we do have the structure we'd be looking for. So we get that corrective ABC, right? So we wick off our 1. Then we just do the exact same thing we did before of the degree higher. We take the length of that completed 1, project it from the 2. Well, this can't be the 3. Right, so it's not as long, right? So we come all the way down here. Where are we looking for the wave 3, right? Between the 1618 and the 175. Well, yeah, we get a little poke through it, but this is a pretty solid pivot. So just as I identified here, I do the same thing down here. So that looks to me like that's a good 3. And from here, I've got an ABC, but it looks to me like this may not be finished yet. So if we're assuming that we've got a completed pivot here, so I've got my third of the larger degree, well, I'm just going to pull from my proposed 2, right, down to this 3 pivot. Well, so this could be ABC into our 4. That's certainly every time. That's certainly possible. Oh, come on. Yeah, it's my great annoyance with TradingView. It won't let you. Come here. So this, as I was trying to show you here, this could be our 4. But it looks to me like we've got another kick up here. Now, we don't know for sure. There's nothing guaranteed. But I look at that B wave and I go, well, is that technical? So if I grab this pivot here to my current A wave here, what have we done? 50 to the tick. So I've got to lean into that a bit, which is why I'm labeling this AB into a potential C here. So I've got some structural resistance here. right? So if we open it up here and we look left, what else do we have? Well, we have this here. Well, we've already gotten through that. Well, we have this pivot here, which lines up rather nicely, not only with our 50, but you see this low volume node over here, right? So it was just price was rejected there. So if we're going to go A, B, C, so this is going to finish for us, if we're going to get this kind of, we're going to get this kind of price action where we're up here and we get a little A, B, C, A, B, and then we're going up for the C. The anticipation is we would then finish with some sort of a, again, I'm hypothetical here. I don't know what that's going to look like, but it would be something along these lines. That would, I have something's askew here. But so this would be potentially now setting us up for the into our 4, 1, 2, 3, 4, 5. This would come down here. Now we potentially are finishing that. Well, what we got to think about that in the context of the larger degree. If this is all just corrective, then we're likely starting some sort of a new trend down here. So this would be, you know, either an A wave or a one wave taking us down. So if we pull back out to our daily and think about, well, what would that mean to that larger degree count? Well, we'd be in some sort of combination here if this is coming down as a 1, or we've made our correction and now we're heading back down again, right? Which is we can't rule that out. So you could potentially, to the larger degree, have 1, 2, 3, 4, 5 all going in. So let's get that up to where we can follow it. So potentially just the one wave going in here off of this corrective structure. So 1, we anticipate the 2 for the 50, right? So we'd have swing high, swing low, not this 50 here. We'd have to redraw whenever we get this pivot down here. Interesting note, we get another pivot down here we want to pay attention to. Right, so prior support, right? Didn't like it last time here. Do we come back down here and get rejected again? No way to know. Right, so we kind of wait and see what kind of reaction we get here, but this certainly does not look to me like we're done yet here. So off of all of this big ridge we got up here of all of this resistance, if we're pushing off of that, it looks to me like we're moving impulsively, which implies one wave or a wave, but we're coming off of this with an impulsive structure thus far, right? And it's very technical, right? Gold tends to be very technical on the longer term charts. On the larger degree, intraday can be very volatile, very hard to day trade gold. But if you step back from it, these waves appear, and we can see it's very technical. So the next trade that I'd be looking for is for this to complete. So if I pull all of this over, I'd be looking for the short here at the 50 on the idea that I'm catching the 4 into the 5. So let me pull that off. So you're looking for the 4 into the 5, right? So I like that trade here coming up to it. I've got a nice confluence of things happening here. I've got pattern, right? Trading from the 4 to the 5. I've got structural resistance that potentially kicks in here. I've got a straight algo play coming off of the 50, assuming we get to the 50. We don't know that we do. So I like all of that, and it sets me up here. So for a potential short here, if we look at it, if we're going to front run this just slightly, stop over the 65, if we can afford that, and this would be our target down here. Well, so let's look at what that. So that's 3.5 to 1. Yeah, you'd want to give it that much room, right? So you could tighten it up, but then you're just trading your wallet, right? So then you're not really trading the structure of the market. So I would want to reduce the size, right? So if you're trading it via a Forex broker and you trade the CFD, you can reduce the size rather than in just the straight futures, where you're going to have to, if you're going to carry this, you're going to have to cover that margin. So you can go smaller size via the CFD with a Forex broker and take that trade there with giving it the room that you would want to give it. Keep the size small, and you've got 3.5 to 1. Nothing wrong with that. And then the point being that would be a logical target here if we were to realize that, anticipating that the next thing that you're going to get is a 3-wave counter trend to come off of that. Boy, I'm really struggling today. To come off of that with a 50% retracement before we go down again, hopefully for the 3. So that would imply 1 ABC into the 2, looking for it at the 50. So the idea being, why give back 50% of your profit if the odds are. Now, again, we don't know that we absolutely bottom there. This could just keep going, but that's a reasonable place to be targeting. So it's always want to trade with, where am I absolutely wrong? Where am I out? What do I have a target? right? Because if you're open-ended on it, then hopium kind of takes over. Then it's like, oh, maybe it'll keep going. Maybe it'll keep going. And while you certainly could be trailing with a stop for that possibility, well, let's think about where it might go. Right. So here's our last pivot. Right. So if we go up to our absolute high here, well, there's the 786. Right. You might, and then you might say anything lower that I might be paying attention to. Well, I don't think it would really be relevant. Here's our dominant pivot, swing high, A, B, C. Well, so I like this just structurally if we're coming back down here for a target at the 786, because that, you know, that then we'd have a true range here. So if you think about that, so if we were to double bottom down here, right, then we just have this range we would clearly have established. I could probably include this little pivot down here as well. All right, so then we have our gold range. All right, and then a question of where do we go next, right? No way to know until we see what happens down here, assuming we get there, right? So right now it's just a question of can we get a fill on the short side here at the 50, on the assumption that we're working off of a 2 into a 4 trying to trade the 5. Well, you'd have to pay attention to the all the way halfway back as well, right? So that you might accommodate that just a little bit here. So do you see what I did? I just went back a pivot. Let me go back to the 4 hour. So you want to think, well, what if I'm wrong here? And this is going to go deeper. What if I've got the wrong pivot identified, which happens all the time, right? We're always trying to estimate what they did. And we're trading this. We're using the Elliott Wave to help us identify. Well, if it's going to be all the way halfway back, then maybe we want to give this a little bit of room beyond the 50 of the swing low to swing high, right? It might affect your size on the entry. All right, so we look here. So if I bring this down to the way we're trying to approach it on the idea that we have a 1, 2, 3 is in, we're looking for the 4. The other thing I would do is draw for the relationship between the length of the A for the C wave. So let me clear all of this out of here. So if I was going to get parity here from the length of my A projected from my B, right? We already know the B is technical because that came right to a 50. So if I grab that, see if we get any confluence here. All right, so here's my 50. So here's my first target. Here's my 100%. You know, it's kind of a judgment call to see what the market's looking like as we approach that. I'd want to stay with the 50 on the assumption that I was trying to catch the algo on the turn, looking for this. So you got a couple of things to consider. One is you put a portion of it on here at the algo target if we get a reaction for that. So maybe 40% here, 60% at the 50, so you'd average your fill, average that price in, right? Knowing that you'd want to be out, you know, somewhere around here. So 1272, not uncommon. What else could we do? We could certainly get a pitchfork on that. So if we draw it up, see, do we get any geometry that can be helpful from that swing low? All right, that kind of tees us up into, again, this is being a leading indicator. We don't know how long it takes. We know that if this holds, so we have a corner pocket. We have a corner pocket at the 50, so we have 80% probability if this low holds. That's the emphasis. If that low holds here, 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 we don't know. We have 80% probability of getting there. That's all we know. So if we're in so maybe this is the 1, 2 of the C wave here. We don't know when it gets there, but I would certainly be watching for that. So you got a perfect corner pocket here. Swing low, swing high to the 50. Put on your median lines if that holds. So so this is not unreasonable here as well. So let's go down to a lower time frame. So you could trade into the C wave. So you can see that we've got 5 here. So coming off of this low, you can see I got 1, 2, 3, 4. Oh, whoops, sorry guys. Looks like I've got 3. Maybe that's A going in. Is that my 4? So it looks like 1, 2, 3, 4, 5 gives me my 3. So we wick this off. Where are we relative? So we still have an impulsive structure. So I'd grab the 2 up to the 3. Well, first I would check this. See how did that look? Right, so in between from the 2 to 3, 38 and the 50, right to target. So I would pull now the entire thing. So we're a little deep here. So this is not relevant here. So let's get this all tightened up since we went so dramatic. We went from the 4 hour to the 30 minute. So you'll have to tighten up when you do that. This is not particular to TradingView. Every platform will do this. right? So as we change time zones, we got to tighten up those pivots. So if this is going to come down here, if we're putting in a 4, I'd be cautious here, right? So we don't have good subdivision here. I'm all the way down to the 30 minutes, so I don't have great subdivision into an ABC here. I'd want to see some sort of little pop. Right, so here, this is not unreasonable here. We got to pay attention to that 1, but you can see the clean wave count here. So 1, 2, 3, 4, 5. Up we go for our third. This sits up here. Now, if we hold, if we hold, right, this right. So we got Vegas wave. We've got the 618. We've got the wave 1. So there's not an unreasonable spot there to be looking for long. But even if I go to the 15-minute, I don't have good pattern here. I've just got straight down. It's not uncommon for the A wave to come right to the 50. So I would want to see a little bit better subdivision here, something like this, before we go up here. That's what I would prefer if I'm looking for if I'm shopping for the long here. Ultimately, I'm shopping for the short, but I couldn't help but notice that. So that's a little deeper than you'd want it, ideally, for this as a 1, 2, 3, 4. That's deep for a 4. It can, not that it can't do it. It wouldn't disqualify. It could come right to the 618 and pivot. But this looks more like an A wave coming down. So I'd want to see the B and the C before I was really getting fired up about a long there. That's me personally, right? I would just want to see more subdivision here, but this could easily come down, tap the 618 and go. Shit, it could tap the Vegas wave here and go. No way to know. Any help down here? Volume is dropping off pretty dramatically here, so we've got divergence here, which supports the idea that this is well. So within this, so you look what we see here. So within this third, I've got 1, 2. Here's the big 3. So that's the 3 within the 3. I don't think this plays as I don't think we're complete here because of the subdivision within that third. So that suggests to me that this was the third of the C, right? We're trying to catch, if you were looking on the long side, you're trying to catch the 4 into the 5. I think that's much higher risk because you're counter trend. So one thought is to wait, let that complete if it's going to complete, and we don't know that it is. But if it does complete, then I like that better. Or if I was shopping for the long side, I'd want to see that pattern separation. I'd want to see that clear ABC in the midst of it, right? And I'd be willing to let that go if I don't see it. If it comes down here and it taps the 618 and goes, you're not going to get them all, right? So if it doesn't fit the criteria, what you're looking for, what you like to see, nothing says you have to take it just because we're sitting between the 50 and the 618. Right, it's not ideal for a 4th. That's deep for a 4. Yet here's our wave 1. So that's what I see there. So it's certainly in play. It's technical when you go out to these longer time frames here. So now I would pull all the way back out to the 4 hour, and just let this develop. Right, we've got a good technical pivot here. We've got our median lines in play here. We've got a count that makes sense. We know we've got a good impulsive structure coming down, right? So if it's me, if I don't see what I like here, I'm going to sit patiently and wait for the short at the larger degree here for that to come down from that 50 to go down to that lower target. So lots of opportunity to be trading in there, right? And then again, the advantage of working with an FX broker is if you're trading the CFD, you can reduce your size, work with partials. Some of you whales, maybe you don't care, right? So you just go right to the futures market, which is, I'm not. I would just tell you that if you go into gold futures, you really got to look long term because it's hypersensitive throughout the course of the day. The slightest little whiff of some interest rate, anything that would affect interest rates, you're going to see gold react aggressively. So be careful on the shorter term frame in there. All right, guys, that's all I got on that. I'll be back with more later. Okay, see you later.